Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, China's economy appears to be contracting now, and the giant US economy is slowing at the same time. But first, just a reminder that this is a long weekend holiday in both the US and Canada, their Labour Day weekend, signalling the end of their summer holiday season. If you're an investor and sold in May and went away, then this is when you return to the markets. Volumes will rise from here. China is on its way back from its summer holidays too, but not to an expanding economy. Their private Caixin PMI for their services sector was very weak, contracting at a faster rate. It's now at a 20-month low. New order levels retreated. This is lower than the official version, which also signalled a sharp retreat, confirming not only a loss of momentum, but an outright retraction in their service economy. And China's heavy truck sales plunged in August, down almost 20% from July and down more than 50% from August 2020. Excavator sales also fell sharply. Recovery seems to depend on new Beijing stimulus. In Europe, retail sales in July were another market disappointment. A flat result was expected, but a sharpest fall was reported, down 2.3% from the prior month. Instead of being up 5.4% year-on-year as they were in June, they're now only up 3.1% year-on-year. Back in the US, after adding 1 million new jobs in July on top of a similar strong gain in June, and expectations that August would add 750,000 new jobs, the American non-farm payrolls report disappointed everyone. It only added 235,000 new jobs in August, apparently because employers are looking at the spreading Delta pandemic with concern. This means that still a net 5.3 million jobs haven't been recovered since the start of the pandemic. This week's jobs report does throw out some uncertainties about whether the Fed will taper this year or not, and it has sharply shrunk the economic growth some Fed models are recording for the third quarter. The view on their giant services economy is mixed. The widely watched ISM Services PMI reported a fast expansion, although growing slower. The internationally benchmarked Market One also reported a good expansion, but at a much more modest level and slowing quickly. Australian retail sales retreated 2.9% in July from their same month in 2020, sucked lower by the New South Wales lockdown. June's results were also negative, dropped by Victoria's lockdown, so the recent trend isn't positive. New Zealand will be the same, of course. The US Treasury 10-year yield opens today at just under 1.33%. And the price of gold is holding, but down by a minor $2 from this time on Saturday, now at $1,828 an ounce. And oil prices have fallen slightly again too, so in the US they're just under $69 a barrel now, while the international Brent price has dipped to just under $72 a barrel. And the Kiwi dollar opens the week at 71.5 US cents, at 1.5 cents higher than at the start of last week. Against the Australian dollar, we're firmer too at 96.1 Australian cents. Against the euro, we're 100 basis points higher at 60.3 euro cents. That means our trade-weighted index starts today at just on 74.3 and above the 72 to 74 range of the past 10 months. We welcome your feedback on these issues. Leave a comment below on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.